John Kransdorff, Afrifocus. Graham, I wanted to ask a few questions from a macro perspective. The first thing, as an investor, when you look at Harmony, there are two aspects. One is obviously the underlying assets, and the second aspect is the share price. And what I want to get to is that in the end, the share price is actually going to be important for many reasons and may well feed into actual strategy. I mean, if you just look at South Africa, you guys have actually done a pretty good job. Then we come to Golpu and Papua New Guinea, and there you've got a tiger by the tail. And that's, I think, one of the concerns of a lot of investors, because in a different market, your share price wouldn't be where it is today. It would be a multiple of what it is today. And if you look at exploration-type stocks worldwide, they've absolutely collapsed. A new part of that particular position, because this is a big asset relative to the size of Harmony. And this morning, when I look at your feasibility study, and I see another 7 years before Golpu comes into production. So shareholders have still got a long wait ahead of them. And when you look at the markets we've got today, these markets are prepared to pay, I don't know, 25, 30 PEs, something which in the end will depend on what happens in this mining industry in South Africa. Because if that doesn't work, those PEs are going to be unsustainable. So that message isn't getting across. And I think management in the mining industry are doing a very poor job in promoting their position in this climate, and particularly as far as jobs and everything else is concerned, as we're seeing in the platinum industry, where everything comes back to blaming management. So that's one aspect which these share prices are facing. The second thing is shareholders in a world where they're prepared to pay 1.5% for US government 10-year bonds, which must be madness by any standards, and yet they're prepared to pay it. They're looking for yield. And the worry to shareholders must be, when are you ever going to get anything out of Harmony? And I think that you have to really re-look at that strategy for Papua New Guinea. I mean, clearly from your studies, you'll show that the big project is the way to go. That'll produce the best returns in the long run. But you may well have to look at some smaller projects which will be cash positive, which may give shareholders something, which may give you a better gold, a better share price, which may have a positive impact, which you may need. Because who knows in the next 7 years when you may have to have a rights issue, if your share price is too low, it's not going to be that easy to get corporate bonds, etc. So I don't think you can forget about that. And I think the mining industry as a whole has done a very poor job in managing this. They've got to have a look at this and realize there are shareholders out there that may change the whole outlook.
I mean, one continues to look at one's strategy and understand the strategy of how you take the company forward. As Harmony, we have taken this asset certainly up the value curve. However, that's not reflected in our share price. What should the company be valued at? I think a heck of a lot more. If you do a valuation on the South African assets, you get a pretty good valuation. If you do a valuation on Golpu and Hidden Valley and the exploration tenure, you get a good valuation. And if you add those two together, you don't get equal to market cap, unfortunately.
My one comment on sort of the whole Harmony thing is to actually spend a bit more time on the South African assets. We tend to come to these presentations and we go, a quarter of the time or even less on the South African assets and 3/4 on Golpu. And Golpu, at the end of the day, is tomorrow's gold. And after we've used a discount rate or something like that, it's discounted a long way down the line. I'm not saying it is very important, and it's a key asset. Okay, it's a key prospect, but the enabling infrastructure, the enabling production, the enabling cash flow is really going to come from here.
Harmony is a tiny company to start developing these massive ore bodies, and I mean, where do you draw the line here? Surely it's clear from the valuation of your stock. It is in our numbers anyway. It's trading at way under half its net present value in our numbers. Doesn't this mean the market's telling you that it doesn't believe that Harmony is big enough to develop these ore bodies? The market will recall what happened when small companies tried to develop things like South Deep without having adequate funding for it. I mean, isn't it time to contemplate creating an exploration company which Harmony would be a significant shareholder in, but let some investors get some of the upside from that and crystallize the value in the other assets.
Harmony is a small company on a market cap basis, $4 billion or thereabouts. However, it is still a significant gold producer, and we are actually producing gold with a good margin right now. And gold price is doing well, of course, and therefore, you know, we look at our cash flows. Gold is above 1,600 an ounce. You know, we actually don't have to go out there and raise any money. I guess there's, you know, what we have shown and demonstrated, if you look at financial year 2012, you know, we funded all our capital, we funded an increase in exploration, we funded dividends, and we still got cash in the bank. And we're bullish on gold, and therefore, you know, we are a big company when it comes to production profile. I don't know where we stand. We're probably number 8 or number 9 in the production sort of rates of the world. We continue to engage with shareholders. We have 10 of our shareholders own 65% of the company. 20 institutions own 75%. You know, obviously, if those shareholders want to make 19 phone calls, they can actually instruct us what to do. They haven't, you know. Maybe those 19 shareholders are fairly long-term shareholders. I think the significance of Golpu and, of course, that region is what distinguishes one company from another is the ore body. The grade of the ore body, the size of the ore body, good ore bodies, and therefore that distinguishes us from other companies.
The circumstances are always more difficult than one can anticipate. The risk that we're facing as an industry in South Africa now is more complicated than perhaps it has been in the past.
We continue to look at options of taking the company forward.